Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look at United Health Group stock today, focusing on its earnings per share and price to sales ratio, both currently and based on guidance management has provided, which in this case will bring us to December 31st, 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please smash that subscribe button, and if you find this video informative, give it a like. There are chapters below if you want to skip ahead, and if you have any questions or notes, let me know in the comments. To begin, I have at the top United Health Group's current earnings per share for the trailing 12 months, totaling $23.84 per share. The quarterly earnings making up that figure are in the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items which we'll use going forward. First, we're going to focus primarily on the past 3 years, as I feel this accurately depicts the company and its current state. I'm using that data to make the assumptions and estimates going forward. With that in mind, I then established a reasonable range in terms of its PE ratio during that time span. In this case, a reasonable PE ratio range is between 20 and 25. Also noting that the average PE ratio is around 22. With our range established, we then multiply those figures by its current earnings per share of $23.84, giving us a fair price range of between $4.77 and $5.96. Based on the price today, it appears to be trading at a fair value, favoring the buyer side. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, totaling $371.6 billion, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, 935 million, as of its last earnings report. We divide those two figures to arrive at a sales to share figure of $397.46. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 1.2 and 1.6 times sales over the past 3 years, with an average of about 1.4 times sales. Based on our current reasonable range and the current sales per share figure, we're able to calculate that a reasonable share price is between $4.77 and $6.36. With the current price around $5.18, it's a fair price, favoring the buyer side. Let's now look at the forward guidance. Looking at management's 2024 guidance, they have provided the following projections for its fiscal year end December 31st, 2024. First, revenue of $400 billion. And the second, adjusted earnings per share between $27.50 and $28. To keep it simple, I'm going to split that range in half and use $27.75 going forward. After removing its adjustments to get us back to a reasonable diluted earnings per share, we arrive at $26.56 as our projected earnings per share figure. Using this information, we can estimate a reasonable forecast of what to expect in terms of a fair PE ratio and stock price. This, of course, requires some assumptions on our part, especially given the amount of time that will pass between now and then. For our purposes now, we're going to keep the shares outstanding figure the same and update it as we go. Otherwise, we are going to rely on what management provides. Taking this new earnings per share, $26.56, and multiplying it by our reasonable PE ratio range of between 20 and 25, we arrive at a fair value range between $531 and $664, which makes the current price of $518 look like a good deal below our established fair value range. Pivoting to the 2024 price to sales ratio based on management's guidance, we can see the top shaded portion is the same as the previous slide, so I'm going to focus on the bottom half. With management's guidance, we can calculate a future projection for sales per share of $427.81, then multiplying this forward guidance by our reasonable price to sales range of 1.2 to 1.6 times sales, resulting in a fair value stock price between $513 and $684, the result being that the current price of $518 is within our calculated fair range and near the bottom, heavily favoring the buyer side. As a summary for our earnings per share calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2024. Then, as a summary for our price to sales calculations, at the top we see it where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2024. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Otherwise, we have noted that the stock is seemingly in between two patterns. First, it's been trading sideways between 454 and 541 since December 2021, with some support noted around 502. Or second, we find an uptrend forming since July 2023, and it's currently near the bottom of that uptrend. Right now, both patterns are within our marked fair value range. All things considered, it appears to be on the buy side of its fair value range. I'm okay with the price. Thank you for watching. Please subscribe.